The Federal Reserve has just announced its new interest rate, and there's something interesting about this month's decision. Curious on what that is? Let's talk about it. Hey guys, welcome back to Republic Labs YouTube channel. In this video, we will talk about the current interest rate decision from the Fed, its impact on Bitcoin, and the overall state of the economy. But before we start, don't forget to like, subscribe, and click that notification bell so you guys are notified when we next upload. So as you can see here, the Federal Reserve has just announced its new interest rate, and to no surprise, it stayed the same as last month. The decision was announced today, and of course, Jerome Powell made a speech that shook the overall market. If you missed out on the announcement and the speech, the Federal Reserve's Twitter account published a link to see the replay of the speech. You can access it here and just click the YouTube link. But overall, his statement and his views on the economy is still pretty much the same as last month. This is because Jerome Powell stated the obvious, that the goal of the Federal Reserve is still to achieve maximum employment and stable prices. Also, he stated that the economy is still pretty much the same, which is still in good condition. He stated that, despite heightened uncertainty, the economy is still in a solid position. Also, he talked about the employment data, as he stated that the unemployment rate remains low and the labor market is at or near maximum employment, hinting that the economy is fine. But because of this, there's a question that pops up. Because if the economy is fine, then why don't the Fed just lower its interest rate and be dovish? The dovish stance is what investors wanted. This is because if the Fed was dovish, liquidity might increase and the overall market will be bullish. But this question can be answered by his statement as well. The keywords he stated that is heightened uncertainty, meaning while the current economy is good, there's still heightened uncertainty. On his speech, he didn't specifically say what caused this heightened uncertainty. However, he talked about the current tariff policy from Donald Trump, which comes back again to the heightened uncertainty. He stated that the current uncertainty around tariff policy might increase inflation. This is why he stated that there is still heightened uncertainty in the market. So currently, there is still a non-alignment between monetary policy and fiscal policy, since Donald Trump wanted one thing and Jerome Powell wanted the other. This is why there is still heightened uncertainty, and it's why the current economic condition might not be as good as he said. On his speech, he didn't specifically said that he was frustrated with Donald Trump. However, it seems that it is implied. It's pretty fair to be honest, because if we take a look at the last couple of months, news regarding tariff policies are very uncertain. This is because Donald Trump seems to be uncertain as well. For example, he mentioned that he wanted to increase tariffs for China. But then again, he stated that tariffs with China should not be too high. But then again, another example is that he wanted to put a high tariff on Canada and the EU. But then, he published a 90-day pause which stops this tariff. As you can see by those two examples, Donald Trump still is uncertain about this tariff policy, which is why currently Jerome Powell looked at the economy as having heightened uncertainty. So what does this mean exactly? A lot of people are saying that the US is heading for a recession, or even currently in a stagflation. According to traders on Polymarket, more than 50% believe that the US economy is heading into a recession in 2025. Also, a lot of experts are saying that currently the US is still stuck at a stagflation. This means that the US economy is not really that good, probably not as good as Jerome Powell said. This is why the Federal Reserve has not lowered its interest rate yet. It's because the US economy is not stable yet. So, to remind you all, currently the Federal Reserve interest rate is stuck at around 4.5%, and it has been stuck since December 2024. This means that the economy of the United States has not been better since December 2024, hinting that the economy is not really that fine. Most of the traders on Polymarket agreed that the current stagnant interest rate will continue to June. As you can see here, more than 80% believe that the interest rate decision of June will be the same as May, meaning the interest rate will hold steady at around 4.5%. So, the Fed will not be dovish yet. However, some analysts are stating that Bitcoin and the overall crypto market does not need the Fed to be dovish for it to be bullish. This statement came from the previous theory, which is that the Fed needs to be dovish for the market to be bullish. This is because when the Fed is dovish, liquidity increases. And when liquidity increases, the market is more bullish due to higher volume. However, that's not really the case right now. This is because some analysts argued that Bitcoin will be a good asset for stagflation. One analyst called Zach Vandal, which is famous on social media, quoted a research from Grayscale, which stated that Bitcoin might be good for stagflation. This is because during stagflation, scarce assets and commodities such as gold usually turns positive. Grayscale argued that Bitcoin was not around for past stagflations, but can be considered a scarce digital commodity and is increasingly viewed as a modern store of value. This means that Bitcoin is slowly turning into a safe haven asset again, which usually happens near the bull market. As you can see here, the consideration of Bitcoin being a safe haven asset again was just mentioned by Bloomberg. Bloomberg is saying that Bitcoin is now trading like gold, hinting that it can be called a store of value again or a safe haven asset. If we take a look at the market movement of Bitcoin and gold, there's currently a positive correlation between both. Both are currently going up, and as you can see here, the movement is pretty much the same. In the previous cycle, this usually happens near the bull market. This means that the statement of Bitcoin being a good asset in a stagflated economy might be true. From a technical perspective, as you can see here, Bitcoin is still going in an uptrend, continuing its movement since early April. However, currently, looking at the liquidation heat map data, there are a lot of selling pressure waiting to happen from liquidations. These selling pressures might happen around the price range of $97,400 per Bitcoin up until $99,500 per Bitcoin. So, for now, all you need to do is be careful and still manage your risk, as volatility might still be up ahead. However, if we take a look at derivatives traders' data, we can see that currently traders are positive again. This is because open interest is rising again, which is usually signs of a bullish momentum. However, institutional investors are not really bullish yet. This is because the only one that's buying big is BlackRock. As you can see here, in the last week alone, BlackRock purchased around 19,000 Bitcoin. However, it seems that in the last 2 days, most of institutional investors are selling. So, all you need to do now is just watch for this uptrend, because if this uptrend breaks, then there's a potential for Bitcoin to go down again. Looking at the Bitcoin liquidation heat map data again, you can see that the current support for Bitcoin still holds strong at around $96,000 per Bitcoin. So, that might be a good buying zone if Bitcoin went down. However, this is not financial advice, as you need to manage your risk and trading strategy yourself. Well, that's all the information I have today. If you guys like contents like this, don't forget to like, subscribe, and click that notification bell so you guys are notified when we next upload. Cheers, guys!